Welcome to the Delaware Mortgage Rate Weekly Update for the week of May 7th, 2012. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you a weekly update. Okay, if we look at the market, last week there was a big report released. It was the non-farm payroll jobs release. Now the numbers showed that 115,000 jobs were created in April, with 130,000 private sector jobs offsetting the government job loss that actually came in. Now the number was a disappointment and was below expectations. The only silver lining in the report where there was an upward revision of last month's report, which added 53,000 jobs. And the unemployment rate ticked down to 8.1%, the lowest since January 2009. Now this may seem like a good report, but in reality, when we dig into it, it actually shows the economy is not doing so well. Because the decline was not because we created jobs, it was because we had a labor force that shrank by over 300,000 people. And this was measured by the labor force participation rate, which is abbreviated LFPR. Now this dropped to 63.6% of the workforce, the lowest ratio since December 1981. So the 63.6% of the workforce are actually participating in the economy, are working. So why is this important? Because this gives us a real read of what's going on. And this is the lowest since December 1981. So the bottom line is it's going to be tough for the government to pay its debt down if it's supporting this people that aren't working. They're either receiving some sort of Social Security or unemployment insurance. So what we need to do really is get the labor force participating more, not so much looking at the unemployment rate, because that does not factor in the people that are not actually looking for work. Overall, the jobs report was underwhelming, and what the jobs report is showing is that if the Fed start another round of bond buying, QE3, it's not going to really help much, because that cannot create jobs. It can stimulate the economy, but no way to create jobs. Okay, if we look at the forecast for the week, we got the Producer Price Index, which is a measure of wholesale inflation, and the core personal consumption expenditure, which again is a measure of consumer inflation. So that came in high last month at 2%, which is the high end of the Fed's range, so hopefully that will stay at 2% or lower. Now, if we take a look at the bond page, which you can see right there on your screen, that the jobs report last week, which came out, appeared to be good, but we dug into it, was not so good. That shows the bonds pushed to all-time record highs, best levels ever, which means rates are now trending at the lowest they've ever been in history. So what that means for you is it's a great time to purchase or refinance a home in Delaware. So go ahead, and I would recommend locking your rate in at all-time historic lows, because the odds are it's going to go higher from here, not lower in terms of your mortgage rate. If you need help with that, please give us a call, 302-703-0727 in the office, or you can apply online, www.prmidelaware.com. Now, in the local news, we've got some free first-time homebuyer seminar events coming up in Newark at the Christiana Hilton Hotel, Saturday, May 19th. We have 2 sessions for you to choose from. You can go from 10 a.m. to noon, or again from 1 p.m. to 3 p.m. You can register by calling us, 302-703-0727, or you can register online, www.delawarehomebuyerSeminar.com. Now, and then we have our Dover seminar, which you also hold once a month in Dover. That's at the Dover Sheraton, right on Route 13, and that is Tuesday, May 22nd, from 6:30 to 8:30. Again, you can register online or give us a call to register for that. So that's what's going on in the local news. And until next week, we'll see you again on the Delaware Mortgage Rate Weekly Update.